The S&P has only fallen by 4% peak to trough. What happens if we actually get some good news? All right, welcome back. Apparently we're all geopolitical experts now, dealing with a relatively foreseen set of circumstances around Iran. But the problem is that there's very little that the financial markets can add by way of edge in this geopolitical narrative. So let's just take a step back and consider what's actually happened more holistically in US equities over the past few weeks. First and foremost, remember we had an AI disruption narrative that's centered on job losses and displacement of workers to autonomous processes. The epicenter of that was software. Then we had a private credit narrative where the market became, and still is to a large degree, concerned over the marks of private assets and the ripple effects that it may have through into public markets, with, of course, credit spreads widening and certain alternative asset managers falling quite precipitously. Then, of course, we had what was happening within the broader economy and just job losses outside of the realm of the AI disruption narrative. We had a very bad payroll, if you recall, and that obviously got commingled and lost within the noise that was happening around Iran. Really, for the past week, all we have talked about within financial markets is trying to determine the duration of a war, the extent and magnitude of where oil prices will go, how long the Straits of Hormuz could be closed if they are indeed closed. And quite frankly, there isn't a huge amount of information that we can glean from the market other than the fact that the oil price itself is probably the best representation of how the commodity traders feel about the situation. So put this all together. A lot of our client conversations focus on the left tail outcomes. Should we be concerned about AI disruption? Should we be concerned about private credit? Should we be concerned about Iran? And the answer to all of the above is maybe we should. But consider the alternative. The fact that all of these things have happened and the S&P has only fallen by 4% peak to trough. What happens if we actually get some good news? And so if you line that narrative up with our quantitative framework that is still relatively constructive on US equities here, the risk reward for equities near term actually looks reasonably constructive with all that bearishness still prevailing. So from bets, still bullish US equity risk. That's your morning matcha with Alty. Good luck trading.